So it's a question of standard costing, May, June 2020, paper 31. Can someone read the question for me? Can you read the question? First, I will directly read what is asked for me. What do they want me to find out?
Total budgeted profit.
They want us to find the total budgeted profit. It is just for 2 marks. How do you get profits?
Sales minus direct material and labor.
Yeah. Sales minus direct material and direct labor. Okay, fine. So come on, tell me, how will you do that? I have per unit selling price. Yeah?
Yep. So 82 minus 4 into 5, which is
Sorry?
20. I'll do it and I'll tell you.
You tell me. Yeah, 4 into 5. Direct labor. Direct labor, how much? For each? 12 into 3. Can you all tell me how do you get the fixed overheads per unit? Please answer.
On the basis of direct labor hours.
So how will you get that?
The fixed overheads divided by the budgeted labor hours. So 42,000 divided by 12,000.
Are you sure?
Yeah.
How much will it come up to?
3.5.
You sure?
Yeah.
Upinder, can you tell me about the fixed overheads?
The direct labor hours are 3. So
1 minute, hang on. Okay, I'll just get my calculator so when I'm coming. See, you need to understand one thing. We are talking about the fixed overhead expenses. Are you with me?
Yes, ma'am.
Okay. So when you're talking about the fixed overhead expenses, that means the fixed overheads are incurred irrespective of the production. So when I want the fixed overhead that I'm going to charge per unit, I'm not talking about the absorption rate. I'm talking about the overheads that I'm going to charge per unit. So it would be the budgeted overheads that I have expected to be incurred is 42,000 divided by this 42,000 I have incurred on the basis of 4,000. What is my budgeted output and sales? 4,000. So it is $10.5. I am talking about the budgeted profit per unit. I'm not talking about labor hours or anything. So when I'm talking about my fixed overhead per unit, it would be $10.5.
Okay, miss.
Are you with me?
Yes,
So
ma'am.
sales minus expenses is 20 plus 36 plus 10.5. What is the total expenses? $20 plus 36 plus 10.5. So the
6.5.
total expenses is 66.5. I want total budgeted profit. So the total budgeted profit will be for the total number of units, for 4,000 units. So how much will this become?
15.5 into 4,000. $62,000.
It will be $62,000. So you all were unable to tell the fixed overhead cost per unit. We are not talking about the overheads absorbed. We are talking about the fixed overhead cost per unit. Are you with me?
Yes,
Yes.
miss.
Now come on. Actual profit. How do I calculate the actual profit? It is just for 1 mark. Please tell me.
Sales minus direct material, labor.
1
Minus
mark, so I can do directly. Actual sales minus actual expenses. What will be my actual sales? Please answer. What will be my actual sales?
344,000.
4,300 units into $80. So this is 344,000. What will be my actual expenses? You can just do the addition in your question, but add all of these three. What will it be? 95,718 plus 150,500 plus 43,600. This is 289,818. So what will be my actual profit?
54,182.
54,182. 1 mark, so you don't need to put all the things together. Come on. Sales price variance. Can you give me the formula?
Standard price minus actual price into actual quantity.
Standard price minus actual price into actual quantity. What was the standard selling price?
82.
Don't
82 minus into 4,300.
Actual quantity is 4,300 units. It is good or bad? Is it favorable or adverse?
Adverse because selling price went down.
You expected to sell in how much?
82.
And you actually sold in how much?
80.
80. So this is an adverse. Okay. Sales volume variance, but they've given some instructions. Use standard profit margin per unit. What is the sales volume variance? Formula for sales volume variance?
Standard quantity minus actual quantity into standard rate.
Okay. But do they want you to multiply it with standard rate?
No profit per unit.
Which profit per unit?
Standard.
Standard profit. What is standard profit?
54,182.
Per unit they want, na? They want per unit, right? So standard profit per unit would be 82 minus 66.5. So $15.5. Yes,
82 minus?
this.
Okay.
Okay.
So 15.5.
What was the standard quantity?
4,000.
What is the
Minus 4,000.
actual quantity?
4,300.
Standard profit per unit,
15.5.
favorable or adverse?
Favorable.
Favorable.
Yeah, it's favorable because I have sold more than what I have expected. Do you mark? I am not putting any dollar sign next to variance. Labor rate variance. Formula.
Same standard price minus actual price into standard rate.
Standard rate.
Mm. Oh, it was ours, right?
No, rate. You will understand volume and price. This is what we go, right? Whatever variance is there. So they want rate variance. That means they want this price one. So this we multiply with SR and AQ. Are you with me?
No.
No. Okay, fine. Whenever we are calculating variance, we do this. We have material, labor, whatever variance. So there could be a volume variance and there could be a price variance, right? There could be a volume variance or there could be a price variance. So whenever it is volume, we multiply it with SR, and whenever it is something related to price, we multiply with AQ. Similarly, whenever it is something related to volume, we multiply with SR, and whenever it is something related to price, we multiply it with AQ. Are you with me?
Yes, miss.
So they are asking us to find which variance?
Labor rate.
Rate variance. So in rate variance, that is price is also called rate, right? Yeah.
Yeah.
And volume is also called efficiency. Are you with me?
Mm-hmm.
So for labor rate variance, you're going to multiply with what?
Actual quantity.
Actual quantity. Okay. Now this is rate. Standard rate minus actual rate into actual quantity is the hours, right? Because labor
Yep.
is hours. Come on.
So
Tell me standard price. Yeah, tell me.
12 minus 12.5.
Standard price is 12. Actual price is
12.5.
and actual quantity is
12,040 hours.
so actual hours is 12,040. Come on, adverse or favorable?
60/20 adverse.
Okay, you are paying more than what you had expected to pay.
Mm.
So it is adverse 6020. Are you with me?
Yes,
Yes,
miss.
miss.
Come on, labor efficiency variance. Formula. Formula. Efficiency is also called what?
So standard quantity minus actual quantity into actual.
Into
Standard rate.
standard rate. Always remember. This SRAQ you should always remember. Volume is with SR and price is with AQ.
Yeah.
Okay?
Yep.
Multiply with standard rate. What is standard quantity? What is standard quantity?
12,000 labor hours.
Okay, fine. Now look over here. Upinder, you have any other answer?
No, miss.
No. Okay. This is your information. This is your budgeted information.
Yeah.
So this is master budget. Is this master budget?
Yep.
Yes.
This is master budget. That means it is standard rate into standard quantity.
So, flexed will be 3 into the actual quantity.
Okay. When we are finding any variance, we need to compare the flexed with actual. Yes?
Yeah.
Okay, fine. Now come on, labor efficiency variance.
So it'll be 12,900 minus 12,040 into standard rate.
Standard quantity. Understand? Let's talk about the standard quantity. Your standard quantity was 12,000 hours for how many units?
4,000.
Your standard quantity was 12,000 hours for 4,000 units. Yeah?
Yeah, so 3 hours per unit.
So your standard quantity is 3 hours per unit. Okay. Your actual hours. What is your actual?
12,040.
12,040. So your actual quantity is 12,040. And your standard quantity is 3 hours per unit into how many units? Standard
4,300.
quantity for actual production, okay? Because it is flexed. 4,300. Into standard rate. What is the standard rate?
12.
12. Come on.
10,320.
4,300 into 3. This is 12,900 minus 12,040 into 12. Adverse or favorable?
Favorable.
Favorable.
Favorable. Okay. 10,320 favorable. Come on. Fix overhead expenditure variance. This would be expenditure. We say expenditure variance is MA. I have already told you, right?
Yeah,
Fixed
master.
overhead as per master budget minus fixed overhead as per actuals. So what is fixed overhead as per master budget?
So master minus actual will be 42,000 minus 43,600,
This is
which gives
master. This is actual. Yeah, which gives you how much?
1,600
1,600.
adverse.
1,600 adverse. Now volume variance. Volume, that means the first part, right? Volume means the first part, right?
Mm-hmm.
Okay, fine. Fixed overhead volume variance. Tell me.
Volume, so 4,000.
Standard quantity minus actual quantity into standard rate. Correct?
Yeah.
What was your standard quantity?
4,000.
4,000. What is your actual quantity?
4,000.
That means your answer will be favorable. into standard rate.
Rate was 10.5.
This you had found out for fixed overheads, right? Fixed
Mhm.
overhead per unit as per budget into 10.5. So this will become how much?
3,150.
Favorable. So this one thing that you all are getting confused is the efficiency and the formulas are also not perfect. Okay. This would always be standard quantity for actual production. Are you with me?
Yes, miss.
Yes, miss.
In case if you're getting confused with standard quantity for actual production, you can also take, this is 3 per hour, and this you can take 12,040 divided by 4,300. 12,040 divided by 4,300. So this is 2.8 per hour. So standard quantity mein you can take standard hours, and here you can take actual hours. So it will be 2.8. And then you can multiply it with your actual quantity into your standard rate. So 12. If you forget the multiplication, if this is confusing you all. Did you get what I said right now?
No, miss.
No. See, let's do the labor efficiency variance again, okay? Give me the formula for labor efficiency variance.
Standard quantity minus actual quantity into standard rate.
Standard quantity minus actual quantity into what?
Standard rate.
No, darling, you're confusing. You're confusing yourself. Efficiency, okay, into standard rate. Yeah, my bad. Into standard rate. You know your standard rate is 12. Are you with me?
Yes.
Standard
Yes.
quantity would be the standard hours. Yeah.
Yes.
And actual quantity would be the actual hour.
Yeah.
Okay, so take per unit standard hour. What is per unit standard hour?
Per unit.
12,000 hours is the standard hours, but divide by 4,000. So your per unit standard hours is 3 hours.
Yes.
What is your actual hours?
Actual will be 12,040 divided by.
No, actual hours is 12,040
Yeah.
divided by 4,300.
2.8.
2.8. Okay. Your actual hours is 2.8 hours. Now do it. 3 minus 2.8 into 12. Into 12. It's 2.4.
Yes.
Multiply by 4,300 units. So you'll get 10,320.
1020. Yes.
Okay. You should always remember this is standard hours for actual production. Don't take the master budgeting.
Okay, miss.
Okay. There, most of the people get confused. Come on, material price variance. Can you read this question for me, please?
Material
Yeah, open the read.
Material price variance and material usage variance have been calculated at 4,558 adverse and 5,160 adverse.
Okay. What do they want from us?
Statement reconciling the budgeted profit at 4,000 units level with the actual profit.
Okay.
Start with in part A.
So statement reconciling budgeted profit at how many units?
4,000.
With the actual profits. That means you have to reconcile the profit. You have to reconcile what? Profits. So you will start with budgeted profit. What is your budgeted profit?
62,000.
Statement reconciling profit. So you have to start with budgeted profits and you have to reach where? You will start with budgeted profits and you have to reach to actual profits. Where will you have to reach to?
Actual.
So what is the actual profit? We calculate governor. What is your actual profit?
$54,182.
582. So when they are telling prepare a statement reconciling, that means you have to tell the reasons why there was a difference in your expected profit and your actual profit. What was your expected profit? What was your expected?
62,000.
What is your actual profit?
54,182.
What is the reason for this difference? What is the reason? The variances. So you will first write all the variances that you know about. Come on, let's start with all the variances that you know.
Sales price.
Sales price variance, please write along with me. Then
Sales volume.
Then
material price.
hmm,
Material usage. Labor rate, labor efficiency. Overheads, expenditure, and volume.
Material rate variance. No, labor rate variance and labor efficiency variance. Then
overheads, expenditure, and volume.
okay. So I have all these variances with me that I calculated. Are you all with me? Are you with me, Arich?
Yes, miss.
Okay, come on. Whatever is adverse, you will put it in brackets, negative. Whatever is favorable, you will put without the brackets. Are you with me? Adverse in brackets. I'm here. What is material price variance?
We didn't calculate that.
It's given here.
Price is 4,558.
What is material usage variance?
5,160.
What is adverse will go in brackets?
They're both adverse.
Labor rate variance.
60/20 adverse.
What is favorable without bracket? Expenditure, overhead expenditure variance. 1,600 adverse and 3,150 favorable. When you do all this plus and minus, you should arrive at this figure. That means you have stated all the reasons reconciling. Why was there a difference between your budgeted profits and actual profits? Calculate, please. Are you coming up to 54,182?
Yes.
Okay.
Yes.
Arish, you did it.
Yes, miss. This one is easy.
All is easy. Come on. This one. Say, read the question. Upinder, please read.
After analyzing the direct materials variance, the directors of Tea Limited plan to purchase raw materials from a new supplier who provides better quality raw materials but at a higher price, but with no trade discount.
Okay. You have to advise the director whether you should change to the new supplier or not.
The material price variance is already adverse.
Material price variance is already adverse, so you will write that. So material price variance is already adverse. How much? 4558.
And so is the material usage variance, which
Just
suggests
let's
that,
talk about the price. Okay.
I mean,
Sorry.
when they talk about material, they talk about both, right?
Yeah, but first we'll talk about price and then we can go to usage.
Okay.
Okay. So first we'll talk about price. Material price variance is already adverse. What does this mean? What is material price variance? Standard price minus actual price into actual quantity. That means your price is already higher.
Mm-hmm.
Your actual price is already higher. You are already paying a huge amount. You're already paying higher than what you have expected. Yes. Are you paying higher than what you've expected or no?
Yes.
Yes.
Okay. That means that we are already having a price variance where you're paying higher than expected. And this payment that you're making, higher payment you're making, could be because of high quality.
Yes.
Okay. This higher payment could be because of high quality. This higher payment could be because of good quality. And if I am paying for good quality, that means I should use less material. That means you should use less quantity of raw materials, or that means you should waste less raw materials, which means your material usage variance should be favorable, right?
Yes.
Yes.
But is that happening?
No.
No.
See, you're already paying a higher price. If you're paying higher price, that means you're paying higher price for good quality, so you reduce wastage. So it means it automatically implies that your usage variance should be favorable. But that is not the case. Is that the case?
No.
Why?
Maybe because the materials are not being used efficiently.
Because the material usage variance is adverse, which they've already told us. Yeah.
Yeah.
So if you shift to a new supplier who is giving better quality raw material, should you consider this suggestion?
No.
Why? You're already paying a higher price, but still you are keeping on wasting your material and your usage variance is also adverse. Yes or no?
Yeah,
Yes.
yes.
Okay, if you're paying higher price, you would expect less materials to get wasted.
Yeah.
Yes.
Okay, so they are asking you whether you should shift to the new supplier or no. So you have made
No.
your background where you've given your justification that if the price is higher, usage should be less, but your usage is not less. So what you should do? So you can
Retrain the employees.
shut up. So you can change the supplier. Maybe the quality of new supplier of raw material from new supplier would be better. Maybe this could be better, which could make the material usage variance favorable. Yeah, which could
So
make
basically,
material. Yeah,
we are implying that the first supplier was not giving good material,
yeah.
even while asking for so much money.
Yes, that is why they are asking you to advise whether you should change or no. So you have to
Okay.
give a thing that you're already paying a higher price. You're already paying a higher price. That means you expect less wastage to happen. But it's not happening. You have a higher price variance also, and you have a higher usage variance also. That's
So we
not
can. Okay,
happening.
got it.
Yeah, you can talk about it because over here your both the figures are negative. So you cannot say that don't change the supplier because you're already in an adverse situation. Suppose if your material usage variance was favorable, the usage variance was favorable. So if the usage variance is favorable, you would say no problem. Even if you're paying a higher price, we are not having any loss. We're using less raw material, so you should not change. But since the usage is negative in spite of paying a higher price, that means what? What you should do?
Change.
You should change. You should try. Are you with me?
Yeah.
Over here, there is not that you speak 2 points for and 2 points against because you have a clear picture.
Okay, miss.
Okay.